especially commodity currencies, but it's basically the US dollar. If there's one thing that we've learned, it's that the US dollar is the true flight to safety when people are really scared. Gold hasn't really responded or has responded strangely. And the yen is actually losing ground to the US dollar. Most of the traditional so called flights to safety, Bitcoin has definitely proven that it's not where people park their money when they're truly frightened. Although a lot of the price behavior of Bitcoin is cyclical, and I'll show that this might not actually be a bad time to buy Bitcoin, depending on if it can get up back above its moving average. But I'll talk about all that in future episodes. Right now, I just want to get the basics down. All right. It says I have a viewer, a mysterious viewer. Viewer, if you can hear me, type something. I don't see you in the chat. I don't see users in chat. So maybe is there a way for viewers to hide themselves? I don't know. Oh, and then he went away. It's like I scared them away. Whatever. Viewers, who needs them? So yeah, you can see the Aussie is just crumbling to the US, well, actually to the yen in this chart, but it's also crumbling to the US dollar. The pound is getting pounded by the US dollar. Oil in insanely low territory, definitely below the cost of production. Gold, weird. I actually got lucky last night just trading some shorter term trades and went long on a trade that wasn't crowded. It's not like everybody thinks gold's going up. It's sort of split evenly. And I got the trade I wanted and then woke up this morning to find it had declined even further. So, gold is not responding to the market decline. And the market did decline even more today, dropping to my secondary panic point, which is a line that I drew based on. By the way, I can't see my screen updating. That's another thing about what's going on today with Twitch. But I know from my test that it was. So I'm just going to assume that you guys can see what I'm seeing here, which is a chart of the S&P 500. Switching to the daily time frame, this line was drawn based on some calculation. Longer appear here, but maybe it was coming down to a weekly band. Sort of the midpoint of the weekly band, maybe, or was it the monthly band? Definitely weekly. In any case, price basically hit that level and then rebounded quite a bit. Still haven't got the big rebound I was expecting, and may not get it. It may slump. This may just be the beginning of a secular bear market. So until gold starts to behave, I would be interested in it if it gets above this point here, 1554. And watch for that. Otherwise, the safest trades have been long US dollar trades. All right. I don't have my usual preparation. So I think we're going to have to brave some copyright violation territory and do things in real time. BabyPips. These early BabyPips lessons are great. They are full of useful information. They have nice, interesting graphics, big, colorful, varied type. Perfect for beginners, perfect for young people. People who are intimidated by charts and graphs and equations, very accessible. And the subject of this chapter is basically when Forex is traded, understanding the sessions, which is a real mind bender. Getting used to different time zones and daylight savings time changes. I don't think anybody has it perfectly down. But the good news is, most of what BabyPip shows you here isn't really necessary to know. You basically just need to know what time it is locally, what time your trading server time is. That's vital. You should know when GMT is, and most Windows clocks have an option to add a second time zone. I set mine to GMT. You should also know when, I think, either the London or the New York session starts, depending on which one you like to trade. Anyway, let's go through this. Forex is open 24/5, but it's not always active. That's true. There will be times when the market is still as the victims of Medusa, which is to say, stone still. That is also true. The Forex market can be broken up into 4 major trading sessions. Yes and no. Sydney session, check. London session, check. New York session, check. Tokyo session, I just don't see any evidence for a Tokyo session. Sydney session and Tokyo session, you will not see any volatility difference. You'd be hard pressed to prove it by me that there's any kind of discernible change between this if you're using the local time of 7 a.m. and then 9 a.m. Not much difference at all. I basically ignore Tokyo and say there's 3 main sessions during a day: Sydney, London, New York. Then they go to show you this chart with the local time, Eastern Standard Time, Greenwich Mean Time opens. I'm assuming these figures are all accurate, but things happen, and often charts are inaccurate. You can find different sources on the internet for different theoretical opening times. I would say, generally speaking, you just got to be a little bit early and be waiting for it. If this is the way you trade, if you're trading a big volatility push at the market open, or you're depending on something that relies on specific trading opening times, you just kind of have to know when those things are going to happen, and don't depend too much on any chart that you find on the internet, because there's so many variables. Like, look what they're talking about. Open and close times will vary during the months of October, November, March, April. Some countries, United States, England, Australia, shift to from daylight savings time, right? Most of the English speaking Anglosphere switches to daylight savings time, but the Japanese don't. Very smart. We should basically abolish daylight savings time. It is a waste of time. Doesn't benefit anyone. Just confuses everything, and it was instituted for reasons that are now very archaic. I know that there are some pushes around the world locally, and I know that here in Canada there have been some provincial moves to abolish daylight savings time, which I support fully. Whether they just decide to stay on daylight savings or stay on standard time, it doesn't really matter. Just stop shifting. The shift doesn't do anything. During the summer, from 3 to 4 a.m. Eastern Time, the Tokyo session and London session overlap, and during both summer and winter, from 8 a.m. to 12 p.m., the London session and New York session overlap. Naturally, these are the busiest times. That's right. These 2 sessions overlap, volatility goes way up. And you see, and this is why I make fun of people who trade based on Forex volume, because first of all, your volume isn't accurate. But secondly, volume doesn't alter very much over periods of time. It just spikes during the middle of the day. During the middle of the trading day, there's a volume spike caused by the overlap of these openings. All right, here we're showing a chart with average pip movements. And I mean, this also is not something that you should depend on, because First of all, averages can vary a lot, and secondly, averages taken from what period? Like in any particular regime, volatility is changing, and for a long time we were in a low volatility period. A lot of people were bemoaning it, saying this is the end of trading forex because there's no volatility. I knew better. It's cyclical. We were in a low volume cycle. Now we're in a high volatility cycle. So these numbers, I would not rely on them. I guess the only what I'm going to say in my notes here is that pip values can vary. Very general, very non-committal. Pip values can vary dramatically depending on the pair and the volatility regime. I'm not going to show you this slide as I'm doing it, because, or should I? Oh, what the heck? That's how I did the coding thing. Let's try it. Okay. All right. Let's take a look at the average pip movement in the major currency pairs during each Forex trading session. What is it saying? Okay. I guess the point that they're trying to make here is that London is the busiest time of the day, and that is true. The London session is the busiest trading time of the day. Let's assume that most of the information here is factual and correct, except for the places where I put a little red X. From the table, you'll see that the London session only provides the most movement. Notice how some currency pairs have much larger pip movements than others. Yes. Like highly liquid, highly traded pairs like the pound yen, fiber and cable, they move more, and they move more in certain sessions. It makes sense that fiber would move more during the London session, and that something like the loonie would move more during the New York session. Although, does it? Yeah, you can see it does. Well, it's London, New York are on a par there. Was there anything where New York outpaces London according to this chart? No. Depending on your strategy, maybe this is important information for you to know. I do not pay much attention to it. Let's take a more in-depth look at each of the sessions as well as those periods when the sessions overlap. All right. Let's duplicate this slide. Call it 3.2 Tokyo session. So they seem to be adopting the convention of calling the first session of the day Tokyo session. They're saying that this marks the start of the Asian session. I mean, whether you call it Sydney or Tokyo, I guess that's fine. Tokyo is the financial capital of Asia. I mean, come on. Is it? Maybe it is. Maybe it's like London. Japan is the third largest Forex trading center in the world. This shouldn't be surprising since the yen is the third most traded currency. I guess that's true. 21% of all transactions take place during this session. But only about 1/5, even though it's 1/3 of the day. So this is sometimes beneficial, and it's a good thing to know. The first trading session of the day, the Asian session, is lower volatility. It's a little more cyclical and a little less unpredictable, more predictable. Some people hate trading it because they feel it's boring. I love it. The only thing about the session that you do need to be careful of is the beginning of the day, because as I pointed out, spreads widen, and they take a few hours, often several hours, to sort of calm down. Pip ranges. Not surprisingly, we see that the highest pip values are for currencies like the Aussie. Aussie yen, I would imagine, is the biggest. Yeah, it's tied with the Aussie dollar. These are not absolute values and can vary depending on liquidity and other market conditions. Anyway, I'm going to say we're not surprised to see that some pairs like AUD trade heavier during the Asian session. The session range for Euro Swissy has not been included since the Swiss franc has been pegged to the euro at 1.2 during the. Yeah, I don't think that is true anymore. Yeah, let me know if I'm wrong. I don't think so. Here's some key characteristics that you should know about the Tokyo session. Action isn't limited to Japanese shores. Yeah. Obviously, anyone can trade Forex at any time, so you shouldn't expect that if there's a big news event at a particular session that London traders aren't going to be participating. They're always on their phone. The machines are always awake and ready to handle events. Commercial companies and central banks are the main market participants during the Tokyo session. I gotta tell you that it does not change. They're saying somehow that these are the main participants, but they are the main participants in any session. Breaking news: Royal Bank of Australia is set to cut rates and announce more stimulus measures. No kidding. And that's just going to either signal the end of the Aussie downfall or continue it. We may see some very, very weak commodity currencies. Liquidity can sometimes be very thin. Yeah, well, I don't know. You're definitely not going to have any problem getting your trades in. You definitely aren't going to be paying higher spreads because of lower liquidity. It will be because of broker safety measures. During these times of thin liquidity, most pairs will stick within a range. This provides opportunities for short day trades or potential breakout trades later in the day. That is true. Let's mention that. Pairs may stick within a range. Good for cratchets, which is what I call bounce in between two bands, between two stationary horizontal bands. Good day trades, or be the base for breakout trades. All right, moves in the Tokyo session could set the tone for the rest of the day. False, nonsense, nonsense. Oh, goodness gracious. Don't believe stuff like this. You get a red X, sir. No, you can't depend on something happening earlier in the day and setting the tone for the rest of the day. In fact, I would argue the opposite. If there's anything that the London session loves to do, it's to take the current direction of something that's happening and say, you know what, fuck this. Here's the mandate that we're setting. Here's what we think. And we are the big swinging dicks in the world of Forex and finance. So I would say that if anything sets the tone for the rest of the day, it's the London session sets the tone. Is less likely that the New York session is going to look at what happened in London and go, we are totally contrary to what those guys just said. New York falls in line with what happens in London. The Asian session doesn't set jack shit. That is just fucking ridiculous for anyone to say that. And it's the reason why I have a slightly love-hate relationship with baby pips. Because, I mean, Where does that come from? Is it tradition? Is it the way things used to be back in the 1980s or 90s? I have no idea. Trades in later sessions will look at what happened during the Tokyo session to help organize and evaluate what strategies to take in other sessions. No way. No way, Jose. All right. Yeah. Dangerous, dangerous nonsense. Let's just continue this slide. So you mentioned that. So this is my viewpoint. I guess you should be aware that I'm mixing up BabyPip's statements with my statements in these slides. But when I think something is true, I won't mark it, or I'll mark it with a green check mark. When I think something is false, as that statement previously definitely was, I'll mark it with a red X. Typically, after big moves in the preceding New York session, you may see consolidation during the Tokyo session. How do I feel about that? I mean, that's generally true, but this is true for any session. After a big move, you will see consolidation. After a big trend, you will see a wick off congestion zone. So I don't think there's anything special about the Tokyo setup there. And why is it doing this? It keeps doing this. I don't like that it's offsetting these bullets a different way so that I have to then do something like goofy like this. It's kind of junk. What pairs should you trade? Focus session is when news from Australia, New Zealand, and Japan comes out. Look, we live in a world of 24/7 news cycles. That's not true. Tokyo session is when news from Oz and Z and can I just say Jap comes out. Say Japan. I mean, it does come out then, but it also comes out at all times. We don't live in a world where anything really sleeps anymore. So, you know, you can't say that there isn't going to be Aussie news coming out in other sessions, especially the London session. More movement in the yen pairs at this time. Yeah, that's maybe true. China is an economic superpower, so whenever news comes out from China, it tends to create volatile moves. I mean, that's always true. It doesn't matter what session we're talking about. This is not time-specific advice that's being offered here. With Australia and Japan relying heavily on Chinese demand, we could see greater movement in the Aussie and yen pairs when Chinese data comes in. I would say that's probably true, actually. Odd and yen pairs are susceptible to Chinese news. But caveat, all pairs could be susceptible to this. Let's check out how you can trade the London session. All right. So we're doing a new slide here. London session. London calling. Oh dear, don't sing. Just when the Asian market participants are starting to close shop, their European counterparts are beginning their day. Several financial centers around Europe. It's London that market participants keep their eye on, yes. London has always been at the center of trade historically, thanks to its strategic location and its location in history. All right, so then Forex capital of the world, I will agree with that. Even post-Brexit, it seems to still be Forex capital of the world, although there were a lot of threats of people moving shop and taking business elsewhere. Maybe. I don't know. Has it happened? I don't think so. London City is still the financial center. These are not absolute values. Euro Swiss was pegged. London session crosses with two other major trading sessions. London being such a key financial center, a large chunk of Forex transactions take place during this time. So I'm going to say being at the center of things. Geography. Historical role. Time. Makes London a central... what did I say? Makes London a financial center. Think of the center of things makes London a financial center. That's a fair statement. And that leads to high liquidity and volatility. Most trends begin during the London session. Garbage. We can't say that. Daily trends, maybe. I'm going to put a red X beside you. I don't agree fundamentally with that blanket statement. But you might be able to say that you can find a correlation between daily trends and the London session start. But that would be tricky, and you're going to find lots of exceptions, and I find the correlation would be low if it exists at all. They will typically continue until the beginning of New York session. I mean, sure, they'll continue through a session, but I would argue they would continue through a New York session in many cases. So let's put that. No. The barbarians are at the gates. I just want to finish a bit of a stream before I start doing daddy daycare. Trends that begin during London have a good probability of continuing through New York. I would say that's basically true. Volatility tends to die down in the middle of the session. Well, the thing is that there's so much volatility at the beginning of the session because most people and algos place their trades near the beginning of the day, beginning of their trading session day, and then they're done. So yeah, volatility does die down. And traders go off to eat lunch. Well, traders don't eat lunch. For one thing, if you're an algorithm, you don't eat lunch. And secondly, if you're a manual trader, which is a rarity now, or more of a rarity, and becoming rarer all the time, you don't eat lunch. So it's not because of lunch. It's because the trades have been placed, and they're most systems and speculators are daily thinkers. It's like what happened this day, what happened this day. They're not looking at intraday trends. That's very much a spot retail way of thinking about Forex. So, yeah, volatility does die down. This is true, but not for the reason they're staying. I'm going to say volatility dies down after the start of the session. When most of the big trades have been placed and there's nothing left to do. Trends can sometimes reverse at the end of the London session, as European traders may decide to lock in profits. Meaningless statement. Absolutely meaningless statement. Trends can reverse at any time. It doesn't make sense to say that trends reverse more often at the end of the London session. If anything, I would say that's not true. So I'm going to put a big X on that. It's not that this doesn't happen. It does often, but you can't say that one thing happens more than another, that the trend ends more often at the end of the London session. No. Which pairs should you trade? It hardly matters. In the London session, there's so much liquidity. Everything gets traded heavily. You saw that in that other diagram with the three colored bars. It's not on this page, but you saw that. Stick with the majors as these have the tightest spreads. That may be true at any time. So if you want to stick with the majors because your strategy depends on tight spreads, go ahead. You could try yen crosses as these tend to be pretty volatile at this time. Well, sure, but you could say that about any pair. All pairs will have higher volatility at the beginning of the London session and the London-New York crossover. So let's just put that as the point. All pairs have higher volatility. During London session, New York crossover. All right, the next one they're going to look at is the New York session. A jungle where dreams are made of. Isn't that an Alicia Keys song? I don't know. I don't know too much about Alicia Keys. So just as European traders are getting back from their mythical lunch break, the US session begins at 8 a.m. Eastern Standard Time as traders start rolling into the office. And just like Asia and Europe, the US session has one major financial center that the markets keep their eyes on. Of course, that's the city that never sleeps, New York. Oh, there's Alicia Keys with Jay-Z. I'm not going to play that for copyright reasons. Table of New York session, pip range of the major currency pairs. Right. So we can see that the ranges are bigger than they were in the Asian session. We're getting into the 70s here. And you can see that the yen pairs are pretty high. But so are the pounds, the Aussie, and the euro. So, I mean, everything is fairly substantial. Here's some tips. There's high liquidity during the morning as it overlaps to the European session. That is true. Okay, so let me duplicate this slide. Call this 3.4 New York. And I'm going to say higher liquidity during London overlap at start of session. Higher liquidity, higher volatility. That is a truthful statement. Most economic reports are released near the start of the New York session. That may have been true at one time. I'm gonna put that as a question mark because I can't verify it. 80% of all trades involve the dollar. That is true. Well, let's just say a high percentage. Let's say the highest percentage. So big time US economic data. Well, the thing is, big time US economic data can be released at almost any time. But when you're thinking about things like non-farm payrolls, the NFP report, that is not always, that's released at the same time every day. And I guess it is released during the New York session because it's released at the end of the day. But I would say that has less to do with session-based knowledge and more about news, which is its own topic. So let's just leave it like that. Once European markets close shop, liquidity and volatility tends to die down during the afternoon US session. Well, volatility dies down at the end of every session. So that's a meaningless statement. No informational content there. There's very little movement Friday afternoon as Asian traders are out singing in karaoke bars while European traders head out to the pub to watch the soccer match. Oh my God. That is plain false. Sometimes you have giant moves on Friday afternoons. Traders do not knock off until the day is good and done. Yeah, that's a false statement. No, baby pips, you're wrong. All I have to do is show you a chart. Maybe I'll do that right now. Let's just look at something like the pound. Okay. Today's Wednesday. So there's Tuesday, Monday. Here's Friday. Look at this. I mean, I know this is just one example, and I'm not going to go through and make an exhaustive research of it. But like, depending on what you consider the end of the day on Friday, that move is from here. Let's make this nice and see it. That move is as big as just about anything that happened during the day. Almost as big as what happened in London. Right? So that is substantial. And look at this, look at the size of this candle right at the end of the day. And then this retracement. I mean, part of that is widening of spread at the end of the week, but no, it's just not true that Fridays are quiet. Fridays are often a point of reversals. As traders unwind their position, a lot of systems are weekly and they don't want to hold anything over the weekend. And so that does cause sometimes reversals, sometimes nothing in terms of reversal. But to say there's very little movement Friday afternoon is absolute blatant nonsense. Also on Fridays, there's a chance of reversal in the second half of the session as US traders close their positions out of the weekend in order to limit exposure to any weekend news. I don't know if that's the reason, but that it seems plausible to me, and that is kind of, there's some truth to that. Yeah. Whether there's enough reversal and whether that's consistent enough to base a system on is interesting. A very interesting query, one that which we may attempt to answer in the future. But I guess let's put that in there, say that I don't disagree with it. So it's no good saying there is a chance, because there's a chance of anything at any time, but there is a higher chance of a reversal in the second half of a Friday as traders unwind their positions ahead of the weekend. Which pairs should you trade? You can trade virtually any pair. Yes, a statement that you could make in almost any session. When reports come in, when news comes in, it could dramatically cause a shakeup in the markets. Yeah, it's true for anything. Confused about which sessions start when? We made the next session just for you. Oh, well, see, okay. Well, we'll talk about this. Best times of day to trade for. What time of the day are TV ratings highest? You said during prime time, you would be correct. Just like TV ratings, liquidity is highest when there are most people participating in the market. So the Tokyo-London overlap. By the way, just because something has higher volatility doesn't necessarily make it a better time of day to trade. Like I said, there are reasons to trade the quiet Asian session, especially for people with smaller accounts. So I would definitely put best time of day in quotes. So I'm going to say BabyPips assumes higher volatility or liquidity equals better trading, but that ain't always so. Tokyo-London overlap equals higher liquidity. True. And then London, New York overlap. true. If I put a hyphen there, I need to put one there. When the real shebang begins, London, New York. Yeah, busiest time of day. Yeah, that is too true. It's during this period when we can see some big moves, especially when news reports from US and Canada are released. Okay, so now I see what they're saying when they talk about news reports. They're talking about the regular economic news that comes out, released always during these sessions. I guess that's just something I don't always pay attention to, and may be true. The markets can be hit by late news coming out of Europe. Well, you can have late news coming out of anywhere. Let me just put this as my belief here. News can come at any time. If you are trading news, it won't affect you because you'll be focused on specific reports. But this is a sub point. If you are not trading news, your system needs to be robust enough to endure occasional shocks and slings. Okay, so this is going to do that stuff. I don't get it. Why are you doing that? And then it just there, that one goes back to normal. Oh, maybe I can fix it more easily that way. At the end of this session, some European traders may be closing their positions, which could lead to some choppy moves right before lunchtime in the US. Oh, that's very vague. You can get choppy moves anytime. How do I summarize this? End of European session can be choppy. To which I would say, yes, but that could be true of any session or session close. Best days of the week to trade Forex. Oh, I am not going to like this. Most of the strange superstitious beliefs about the variance between days and days when you should not trade is based on utterly bogus, statistically invalid notions. Now we know that the London session is the busiest out of all the other sessions, but there are also certain days in the week where all the markets tend to show more movement. Know the best days of the week to trade Forex. This varies wildly between months and years, and I've done the research myself. I know this for a fact. I don't know if I kept a lot of that stuff, but we'll do it again. We'll reproduce the research, and we'll look at the difference in daily variations in different currencies through the week. Maybe we'll find a clever way to automate some of it. But you can see that they've produced a table here. I go through past on Friday, yeah. And they're saying there's a range in pip values, pip ranges for various days. And they've highlighted Tuesday, Wednesday, Thursday as being more volatile than Friday and Monday. I don't know, that may be true. Let's put that as a possibility. Tuesday, Wednesday, Thursday might have higher pip ranges. Certainly, we can say that Monday is going to have a lower range because the beginning of Monday is always a little bit slow as traders sort of get into it, and also a lot of systems are waiting to see what the first moves will be like. That's not the same as setting the tone, though. I don't think that you can say what happens early in the week is what's going to happen later in the week. But definitely people will sort of wait for things to settle in place. And then in the start of the London on Monday is when things start getting going. So I can agree that Monday might be uh, lower pip range. But look at, even in this chart, we see examples of a Friday range being bigger than a Wednesday range. Right? This is bigger. Not 179 is bigger than 152. 98 is bigger than 91. 111 is bigger than 99. So, I don't know if there's any point in paying attention to any of this. As you can see from the chart above, it's best to trade during the middle of the week. Whatever. Whatever, baby pips. You're drunk. Go home. It is not necessarily better to trade during the middle of the week. Fridays are usually busy until 12 p.m. Eastern Standard Time, and the market pretty much drops dead. No, I just showed you that isn't true. Wrong. Busiest times are usually the best times to trade, since high volatility tends to present more opportunities. I fundamentally don't agree with that. High volatility presents more chances to get taken by surprise. Unless you're Edward Cullen, who does not sleep. There's nobody who doesn't sleep. What is up with that? Oh, he's a Twilight character. Well, there you go. Yes, vampires possibly don't need to sleep. That makes sense. Notification here. Sleep is an integral part of a healthy lifestyle. Yes, I couldn't agree more. I didn't know this. I didn't always know this. Now know it. And it is really a problem when your sleep is irregular. You need sleep to recharge and have energy. You'll need rest. That's one reason to use a robot, because they don't need to sleep. Knowing the optimal times to trade and the times you should sit out and just play some Fortnite instead. They've updated this, and I like that, because that was sort of the original concept of this live broadcast, is that I wanted to call it Game and Trade, the Game and Trade Variety Hour, where I would trade, and then in between trades I'd play video games, because that's really, you should be doing something like that instead of watching the charts. Chart watching and tinkering with trades that are in progress is a terrible habit. And so if you just trade and play video games, that's a great lifestyle. Although maybe you want to do more than just play video games, but um, but I'm gonna say I agree with the statement very much. Knowing the optimal times you should trade and times you should sit out and just play some Fortnite instead. Copy that. Put it in quotes. But it doesn't necessarily have to do with volatility, though. Quick cheat sheet. Best time to trade when two sessions are overlapping. Okay, but see, again, this goes in with their philosophy, their general philosophy that higher volatility and liquidity are the best times to trade. European session is the busiest. Middle of the week typically shows the most movement. We showed that isn't necessarily true. The worst times to trade, Sundays. Okay, I agree with that. Don't trade on Sundays. High spreads and low liquidity. Fridays. That's a lie. It's a lie that a lot of people believe. And I think, is it BabyPips that started this lie? I don't know. don't know where the source of this myth came in. Liquidity dies down during the latter part of the US session. Maybe a little. Not a reason not to trade on Friday. Holidays? See Sundays. Yeah. There's no reason not to take the holiday if it's a big major holiday. Major news events. Well, that's true and false. Some systems and traders thrive on news trading. Or when you're emotionally discombobulated because of a life event. Did I say discombobulated? Let's try spelling it. Discombobulated. All right. You can always be a swing or position trader. That's right. If you trade longer periods of time, then you don't have to worry about any of the timing of specific session starts and stops, and remembering daylight savings times, and keeping track of time zones, which is mind-boggling. Yeah, that stuff doesn't matter to a trader who's trading over those periods.